Namaste, good morning. A session where hopefully we complete the remaining parts of transfer pricing. Yesterday, when we were winding up, we were looking at primary adjustment and secondary adjustment. Primary adjustment, that which is made in the books of the assessee. Secondary adjustment, that which is made in the books of my associated enterprises where I want them to bring back the money. Secondary adjustment will be made in the following circumstances. One, suo motu adjustment. Two, AO making the adjustment. Three, on the basis of advanced pricing agreements, which we will see later today. Four, on safe harbor rules, now it is not yet notified. Five, due to DTAA provision. In these cases, within 90 days, depending upon filing of return, depending upon assessment order, all these things. If not, you need to bring back, if not, you need to compute interest. Interest will be SBI rate at 3.25%. If it is a INR transaction, or Libar plus 3% if it is a non-Indian currency transaction, foreign currency transaction. There is one method available to pay the additional tax and take it beyond. That additional tax will be at 18%, okay, plus 12% surcharge plus 4% educational cess. Okay, in such cases, that will be the final and you did not pay. We stopped with the theory, we are going into some practical element. No, its interest is perpetual, year to year. Exit tax is one time. Maybe, but yeah. Vishnu Polymers Limited is an Indian company having transactions which are subject to transfer pricing regulation. In June 21, the assessment for year 1920 and 2021 were concluded due to the after the due process under law. In both the years, in respect of the transaction with the AE, the ALP has been determined in euro. For the assessment year 1920, the primary adjustment translated into 90 lakhs, and for the assessment year 2021, it is 2.4 crores. The assessment order was passed on 12/6/21. The assessee is inclined to accept the same and not to prefer an appeal. You are required to answer the following in the light of the above. How will the quantum of primary adjustment be treated in the books of the assessee as well as secondary adjustment? How will the forced completed assessment impact the assessee? What steps are to be taken to prevent the secondary adjustment? Will there be any secondary adjustment in the hands of the assessee if the required steps are not taken? You are required to outline the concept involved. Read through. Hmm? Will secondary adjustment be carried out in 1920? Only if it exceeds 1 crore. Okay. Secondary adjustment means adjustment carried out in the books of the associated enterprise to ensure the mismatch of cash account is also balanced. Secondary adjustment shall be made where the adjustment is due to suo motu reasons, okay, order of AO due to APA, safe harbor rules, and DTA. Where secondary adjustment is made, then money has to be brought into India within 90 days of adjustment. In the given case, the adjustment is due to the order of AO. Hence, 90 days from the order. Hence, 90 days from the order, that is, what is the date of order? 12th June 2021. That is 90 days from 12 6 21. Okay. So June will have another 28 days. June will have another 28 days. July will have 31 days. Oh, sorry, 18 days. Sorry, 18 days. July will have 31. August will have 31. Okay, so 62, 70, 80 plus September 10 days. September 10 days. Okay, on or before 10th of September 2021. Where money is not brought into India within 10th September, then assessee is liable to consider the money as advance and charge interest on the same. Assessee is liable to consider the money as advance and charge interest on the same. Interest shall be, in this case, I think the transaction is in foreign currency, correct? Huh? Okay. It is the transaction is in foreign currency. Interest shall be LIBOR plus 3% for every month commencing from LIBOR for every month they went down. Okay. Commencing from the date of adjustment, not from the end of 90 days, commencing from the date of adjustment. However, there is one recourse available to the assessee. He can opt to pay additional income tax on the adjustment. He can opt to pay additional income tax on the adjustment. Additional income tax will be 18% plus 12% surcharge plus 4% HEC. What will be 18 into 12%? 2.16. This will be the என்னடா ரெண்டாவது நோட்டாடா அப்படியா அவ்வளோ படிச்சிருக்கியா நீ நம்ம இன்னும் நோட்டு காலி ஆகிட்டு இருந்தோம் Question number 22. Question number 22. Continue the question number 4, Sony Japan, and answer the following. What is the Sony Japan adjustment? Question number 4, which we worked out. What is the adjustment? Huh? No, 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 not at all, not at all. இல்ல கொஞ்சம் நோட் புக்ல பார்க்கணும் நீங்க எல்லாரும் கொஸ்டின் இப்ப சொல்யூஷன்ல தான் பார்க்கணும் நீங்க எல்லாரும் கொஸ்டின்ல பாக்குறீங்க what is assessing officer shall increase the income by 6 crores 6 crores yeah 6 crores okay assume primary adjustment is made by assessee suo moto return was filed in 30th on 30th November is secondary adjustment mandatory. Within what date the secondary money has to be repatriated? Assume the money has not been repatriated till 31st March and the assessee decides to pay additional tax. What are all the consequences? Assume SBI rate to be 11%. Primary adjustment 6 crores. Okay. within bracket is for the you for the answer. Even he might have written a file written even in September, October, but 90 days from due date of filing returns. Assuming money has not been repatriated till 31st March and the assessee decides to pay additional, what are all the consequences? Hmm. To make the cash flow also proper. It is BEPS. It is BEPS norms international. Money needs to be within 90 days from the due date of filing returns. So what happens? 31 days in December, 31 in Jan, and 28 in February. Okay. From 1st of December to 31st of March. On 31st March, assessee decides to pay additional income tax. Okay, base tax at 18% of 6 crores. Yeah, taking that 2850 as the income of financial year 21-22, you will pay, or 22-20, no, 21-22. As on 31st March, you go know that. Are you taking? என்ன அவங்க காத்துல தான் அப்படி you're keeping cotton your uh, fundamental requirement. The fastest travel ஆகுது 2 years. Or helmet, at least something you should wear. Not this helmet, should cover. Yeah. இங்க தொடச்சு முடியாது தலையில் health. So 1 crore 25,79,840 is the additional income tax payable. Once you pay this, that secondary adjustment is not mandated. Otherwise, till you make the secondary adjustment, the compounding interest will compute. Book entry. In many places in our Caro and 3CD, they'll ask, is the book entries of the assessee proper? Book entries play a big job. So where are we in our discussion? We now know what is the base rule, associated enterprises, international transaction, computation of ALP, primary secondary adjustment, though it is in 92 CE. Okay, moving forward. Administrative provisions. One of the aspect which I was telling you yesterday is, do not expect the assessing officer to have complete knowledge of all these things. He will take the help of TPO, transfer pricing officer, reference to TPO. Previously, we have studied reference to valuation officer, reference to valuation officer. Ipo, valuation officer submits a report to the assessing officer. Is the AO bound to complete assessment by taking it that report? Yes, he is. How can he say? When you have referred the case. Similarly, if the case is referred to TPO, TPO's report is binding on the assessment officer. He cannot set it aside. Okay? Technically, Lola, TPO becomes the assessing officer. Whatever powers AO gets, TPO also gets. I know it's a difficult question, but still, what are all the powers of AO? Good. Not a difficult question. He can ask for books of accounts and documents, inquiry, asking him to produce in writing everything. Okay. Inga, everything will be related to transfer pricing. What information you relied upon to determine your ALP? What are all your comparables? What are all your functional differences? How you arrived at that functional differences? Such questions will be asked. And then TPO produces this report to AO, based upon which AO will complete the assessment. Suppose later TPO feels that the report is having mistake. Can he rectify it? Yes, because it is the power of AO. 154 rectification by AO. TPO gets the power of AO. Okay, right. This section provides for referring to the TPO any issues relating to computation of arm's length price. The option to make reference to TPO is given only to the assessing officer. Assessee cannot say. Okay, assessee cannot have that option. The option is only for the AO. Okay, AO has to take the approval of commissioner before making the reference. Internal management procedure. TPO may be anyone, joint, deputy or assistant commissioner of income tax. When such reference is made, TPO gets all the powers of AO. TPO now becomes the assessing officer. TPO will issue notice to the assessee asking him to produce books, documents, other information relied upon him in computing. His powers are limited to relating to transfer pricing. He cannot ask you 43B or a proof and a kudu. Okay, he is a specialized person. Now this will be known as okay, Vega இருந்திருக்கலாம் மன்னிச்சிடுங்க. Now this will be known as technical unit. Now this will be known as technical unit. It's okay, Ananya. TPO shall issue notice to the assessing asking him to produce books, documents which are being relied upon. Where assessee fails to provide, TPO shall get the powers of civil court. He can issue summons 131, go for survey 133 and 133A and 133B, seek information, okay, from all the sources. TPO also has the power to go beyond what has been referred to. Okay, 147. What is that? Reassessment. Where assessee has information that some income has escaped assessment, he shall issue notice under 148 after complying with 148A. Where notice has been issued and then during the course of assessment he comes across some other thing, even though it is not there in the original notice or 148A inquiry, he has powers to go into that. TPO also has powers to go beyond what has been referred to him. He can verify other international transactions which are either reported or not reported. Wherever, my dear friends, if case has been referred to TPO, assessment time limit gets extended by 12 months. Wherever a case has been referred to TPO, assessment time limits get extended by 12 months. Okay. For 9 months you should complete. December 2022 you should complete. If it is referred to TPO, December 2023 from the original deadline. The TPO has to pass the order at least 60 days before the completion of assessment determining arm's length price after considering the evidence document produced by the assessee and the material gathered. He has to send a copy of this to the assessing officer and the assessee. The order of TPO determining the ALP of an international transaction is binding on the assessing officer. Is binding on the assessing officer. In this effect, it means AO has to proceed with the assessment on the basis of TPO's order. In order to provide sufficient time for the AO to complete assessment in the case of reference to TPO, subsection 3 specifies TPO has to submit the report at least 60 days before the expiry of time limit. We may recollect that if reference is made to TPO, time limits are extended by 12 months. Okay. TPO has the power of AO. Hence, he has power to rectify his order under section 154 if any mistake apparent is there. If such rectification is made, AO has to rectify the assessment order to bring in conformity with this. And now it is going faceless. The notification is pending. For everywhere, notification is pending. Now, powers of AO. AO has the power to recompute the ALP determined based on the TPO's report or otherwise. The term otherwise means price charged or paid in international transaction has not been determined by acceptable method. Okay, RSM, resale price method, cost plus method should have been adopted, where you adopted some other method. Information and documents pertaining to international transaction has not been kept properly. Information or data used in computation are not reliable. Assessee fails to furnish document. Where AO increases the income, deduction under Chapter 6A, exemption shall not be allowed. That's what I always tell you. This comes later, but every answer should have this as a note. However, no adjustment shall be given without giving opportunity to be heard. Principle of natural justice. Additionally, it is mentioned that any adjustment in the books of assessee, the resulting adjustment will not be made in the books of associated enterprises, or in other words, the TDS or other provisions will not change. You should have deducted tax on that increased amount. That will not be there. Okay? Because I have paid you 1 crore. I should have only paid you 80 lakhs. Now, TDS provision changes. I have made for 1 crore, I should have made only for 80 lakhs, or vice versa also. So, they are ensuring that those provisions will not apply, only the adjustment made. (92E) is the reason for all of you being here. Mandatory order. The past questions were like this. Where any reference is made by AO to the TPO under section 92CA of the Income Tax Act, what are all the procedure to be followed by TPO? Can TPO exercise his jurisdiction on any international transaction not referred to him but subsequently comes to his notice? Okay. What are all the procedures? TPO gets the powers of AO and then write about the books of accounts, documents, inquiry, where assessee is not producing 131, 133. Okay. I'm not repeating the same answer, cut paste here also. Okay. Enumerate the consequence that would ensue if the assessing officer make adjustment to ALP in international transaction of the assessee, resulting in increase of total income. What are all the remedies available to an assessee to dispute such adjustment made? Okay, appeal. Okay, 3 things. 154, rectification. Can you quickly write it down? The remedies available are 154, rectification. 263, revision. 246, appeal. Okay. The first part of the question, enumerate the consequences due to assessing officer will increase the income. Where AO increases the income, you cannot claim any deduction, expenditure, etc. Okay. This is a 2-mark question once. That is not a remedy, that is an acceptance. Genek Limited is an associated enterprise of Takoyo Incorporation, Tokyo. The latter has a permanent establishment in India. The company rendered services to Genek for which tax was deducted at source and remitted. The arm's length price was recomputed during the course of transfer pricing assessment. Genek want to know whether there will be a corresponding recomputation in its hands also. The arm's length price of Takayo Incorporation was recomputed during the transfer pricing assessment. Okay, the answer is no. That's what is the last sentence you studied. Additionally, it is many that any adjustments in the books of the SC, the resulting adjustment will not be made in the books of AE. In other words, the TDS or the other provisions will not change. Secondary adjustment where number book here both are Indian entity. Okay, here if you see Genek Limited is an AE of Takoyo Incorporation to Tokyo. The latter has a permanent establishment in India. So the PE's income is changed by the assessing officer India, not assessing officer Japan. Okay, in that case should he change Genek Limited also? Not necessary. Okay, suppose if it is two countries, then depending upon DTAA, depending upon that country's provision, associated, the rules will change on secondary. Then yeah, yes. So point number 5 of power of assessing officer. Refer point number 5 of power of assessing officer. Examine the correctness or otherwise of the following with reference to the provisions of income tax law. TP rules shall have no implication where income is computed on the basis of book profits. Yeah? Yeah. TP rules shall have no implication where income is computed on the basis of book profits. Okay? I take Ananya's answer and progress forward. Normally on book profits, no TP adjustment. However, normal income can change. The entire net profit can change, in which case book profit will also change. Okay, so can you write down? Book profits is based on net profit as per P&L account. Net profit as per P&L account. Full stop, continue. Where TP adjustments are made only in the statement of income. Then it will have no impact on computation of book profits. Where TP adjustments are made as part of books of accounts, then the net profit will change. And accordingly, book profit changes. Second, AO can complete the assessment of income from international transaction disregarding the order of TPO by assessing the contention of assessee. False. Okay. AO is bound to consider the report of TPO. I'm not referring to TPO, I myself making the adjustment. I'll come to question number 27 after penalty. Okay. Question number 28. Chetan Private Limited, located in a special economic zone, is engaged in manufacturing activity by importing raw material from its holding company, Bada Incorporation of UK. The following are furnished. Chetan Private Limited has imported goods to the extent of 60 crores in the financial year. Bada Incorporation supplied same raw material to unrelated party with a markup of 20%, whereas to Chetan it is at a markup of 25%. Chetan Private Limited was allowed to use the brand name of Bada Incorporation without any payment, whereas the unrelated party cannot use the brand name. The annual cost of brand is 100 crores. Chetan Private Limited was allowed a credit period of 2 months, whereas the other parties did not. Okay, unrelated party, Bada Incorporation allowed only 1 month credit. The interest cost may be taken as 12% per annum and the purchase was uniform throughout the year. The assessing officer referred the matter to TPO for computation of ALP. Compute the ALP of the transaction and adjustment to be made. What is the due date of furnishing audit report? If TPO has enhanced the income of Chetan Private Limited by 2 crores, will that enhanced amount of income be eligible for deduction under 10th AAA? Will Chetan Private Limited become liable for penalty for underreporting based on TPO's report? Read through. The first part of the question is compute ALP and the adjustment to be made. So Chetan Private Limited imported from its associated enterprises, okay, from its holding company Bada Incorporation, associated enterprise, 60 crores worth of goods. Normally that company to any other party would have sold it for 20% profit. For me, they are selling it for 25% profit. Okay, so 5% extra which needs to be slashed. But I accept there are two reasons for which they are doing. I'm using the brand name of Bada Incorporation, which is worth 100 crores. Okay, 100 lakhs, sorry, 1 crore, 100 lakhs. And I am also getting extra 1 month credit, which others are not getting, for which that company would have incurred an interest cost. If I make the adjustment, I will know what is the total adjustment that needs to be made in my income. சொல்றேன் ராஜா. நான் தான் 60 lakhs போட்டிருந்தேன். You can do the other way also. Like for 2 crore 40 lakhs, you can directly find it out also. Okay. No, they'll specifically tell you. Don't worry. How to compute this spending? Ah, 60 lakhs into huh? Oh, 1 percentage. Oh, 12 percentage per okay into 1 percentage. Okay, only change I have to make here, huh? Divided by 12 per month, 1 month's purchase. Okay, And another thing which all of you should understand is, as she was telling you, interest will be for the cost, not for the profit. Now, profit loan வாங்கியிருக்க மாட்டேன். Okay, only so 48 crores. Purchase is uniform throughout the year into 1%. 1 month purchase into 1%. One month only additional credit facility. So 1%, 12% per annum. So 1% per month. Divided by 12 is 48 crores is the total cost. Ipo, you need how much money to rotate? 1 month money only you need to rotate. Any doubt? 1 crore 36 lakhs. 1 crore 36 lakhs. அதான் 12 lakhs இருக்குல்ல என்னப்பா 12 lakhs you are earning for him, you are earning 960. Direct on the difference போடலாம். Not come all the way roundabout way of 60 minutes. Are you clear? Any doubts? Shall I proceed? But please write the first answer that they are associated enterprise. Okay. What is the due date for furnishing audit report? Okay, here it is 30th November. On the 1 month before கிடையாது. Okay. With regards to transfer pricing cases, audit report has to be filed along with a return of income. That is 30th November. If
transfer pricing applicable under the text of the that is for extra days.
yeah, normally 31st October due date of filing return. Now for transfer pricing 30th November. That is assessment. Yeah. If EPO has enhanced the income of Chetan by 2 crores, will that enhanced be for available for okay? There is கரெக்டா நம்ம வந்து நோன் எழுதிட்டோம். பட் ஆனா சஜஸ்டட் ஆன்சர்ஸ்ல பார்த்த போது ஒரு எக்ஸ்ட்ராவா ஒன்று எழுதியிருந்தாங்க. TPO cannot enhance by 2 crores when the adjustment has led to only 1.36 crores. TPO can increase the income only by 1.36 crores, where TPO increases, then no expenditure, deduction, or exemption can be claimed against the such increased income. Random, yeah, exactly. It was just. No, 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 no. The contestable Dana. Why do you even pay tax for 1.36 crores? Will Chetan Private Limited become liability for underreporting? Yes. Okay. 50% of tax will be the underreporting. Yeah, assessment done it. Um, தெரியலையே. சொல்லுடா. Yes, Chetan Private Limited is liable to okay pay. Ena, you have imported at a higher price. You are shifting your profit. The profit should have been taxable. You should have done yourself. தான் டிபிஓன்னு சொல்லிட்டாங்களே. Once more. No, penalties under respective law. Yeah, good question. Penalties under respective law. No, she's asking uniformly. Is there international penalties? No, under nor yeah, discretion and other aspects are there. So penalty is under the local laws. Okay. For a minute, I'm traveling out of 92 and coming back to 92. But what we have completed under 92? 92A, 92 base provision, 92A associated enterprise along with deemed associated, 92B international transaction, 92BA which defines specified domestic transaction, 92C arm's length price computation, 92CA reference to valuation transfer pricing officer. Okay, 92C CE primary and secondary adjustment, 92E our audit mandatory provision. This is what so far we have covered. After completing, we will write it in a serial order in our notebook so that we are clear. Okay, because the practical area gets over here and then goes to theoretical. That's why I want to take up 94 next, 94A and 94B. That is what is meant by notified. First, 94A. What is notified jurisdictional area? A country with which India does not have free exchange of information. A country, NJA is a country or a territory. Country means which has got its republic. Territory means which is still under the control of another country. A country or territory with which India does not have free information. This India cannot say it's an NJA. Internationally, they will declare. ஒரு காலத்துல சைப்ரஸ் இப்பயும் அது இருக்கு பட் அந்த நோட்டிபிகேஷன் வித்ரா ஆயிடுது something like that. Probably they will declare Afghan as a notified jurisdictional area. Okay, so due to lack of information. What is my intention? My intention is to protect our revenue. Please understand. Transaction with any person in an NJA will be treated as transaction with AE. That person need not hold 26%, directors, control, know-how, nothing works. Transaction with any person located in a NJA, notified jurisdictional area, transfer pricing regulations will apply. How? Because I will consider that person as A. If there are multiple ALP available, then 6 or more data set. Below 6, average. Arithmetical mean. If there are multiple transfer pricing ALP available for an assessee located in NJA, the highest will only be taken. The highest will only be taken. If the person is located in NJA, if you are transacting party. Third, tax has to be deducted at source. Normally, I will study in DTA, normally either as per law or as per DTAA, whichever is assessee friendly, normally. But if the person is located in NJA, whichever is higher. Where is he registered? Where is he registered? Where is he registered? No problem. Yeah. The central government may, having regard to lack of effective exchange of information with any country or territory, specify by notification such country or territory as NJA in relation to transaction. A transaction where one of the parties thereto is a person located in NJA will be deemed to be an international transaction, and all parties are deemed to be associated enterprises. Accordingly, all provisions of TP will get attracted in the case of such transaction. However, the benefit of permissible variation, that 3%, okay, based on the rate notified by would not be applicable in respect of them. Okay, no tolerance limit. payment made to any financial institutions located in NJA would not be allowed as deduction unless the assessee authorizes the CBDT or any other income tax authority acting on its behalf to seek relevant information from the financial information from the assessee. So you cannot get loans there and make payment unless it is authorized. No deduction in respect of any expenditure or allowance, including depreciation arising from transaction with NJA, would be allowed unless the assessee maintains relevant documents and furnishes the information. A sum credited or received from a person located in NJA is deemed to be the income of the recipient, assessee, that is assessee, if he does not explain satisfactorily the sources by which he got it, etc. Rate of TDS is okay, whichever will be higher, okay, rate specified in law, DTAA or 30%, whichever is higher. Never transact with a person in NJA. That is the bottom line. ஏன்னா information free flow இருக்காது ராஜா. He said China itself is becoming a bigger problem for us for lack of information. அப்புறம் ஓஹோ There is one old film, 90s film. Where sudden name strike artist English artist is a very famous artist. Where he gets stuck in the airport. Terminal, Tom Hanks. Okay, because the other country will be declared as a non-republic. Okay, practical approach to section 94A first, that is NJA. Question number 13. A limited ரொம்ப சிம்பிளா இருக்கும் NJA question, straight forward answer பண்ணிட்டு ஸ்கோர் பண்ணிட்டு போக வேண்டியதான், அதனாலே கேட்கறது இல்ல. A limited, an Indian company, provides technical services to a company located in a NJA for a consideration of 40 lakhs. It charges 42 lakhs for similar services rendered to PQR which is not located in NJA. PQR is not an associated enterprise of A Limited. Discuss the tax implication, read with 92A, read with 92C. Transaction with any person located in NJA shall be deemed to be an international transaction and the person is deemed to be an associated enterprise irrespective of other aspects. Hence, provisions of transfer pricing are applicable. In the given case, XYZ Limited is located in NJA. XYZ Limited is located in NJA. Hence, TP provisions will apply. AO shall increase the income of the assessee by 2 lakhs. By 2 lakhs irrespective of any range concepts. A 3% tolerance, 5% tolerance. Question number 31. And the 92C is the method of the ALP. 92A is they are associated enterprise. Alpha Limited, the assessee has sold goods on 23rd January to Beta Limited, which is located at NJA. The CIF value of goods is 4,000 metric ton. Sold for 4,000 metric ton sold is 4 crores. Beta Limited is absolute stranger to Alpha Limited. Will the TP provision apply? Will these two companies be regarded as AE? Okay. Following further information. Identical goods have been sold to H Limited Sydney at 10,200 as per the terms of the, whereas the TNMM arrived is 10,180. If TP are applicable, what will be the impact on profit of Alpha Limited? Should be considered. Okay, right. உங்களோட இயருக்கு வரணுன்றதுக்காக அந்த டே நான் தான் பரவாயில்ல. போன கொஸ்டின்ல டேட் மாத்தாம விட்டுருக்கேன். அக்டோபர் 20 இருக்கு. Transaction with any person in NJA will be deemed to be an international transaction. Hence transfer provision. Okay. So in this case, what happens? In this case, what happens? Beta Limited, okay. Beta Limited is an associated enterprise of Alpha Limited, irrespective of other aspects. In case of a person located in NJA, in case of transaction with a person, transaction with a person located in NJA, where multiple ALP are available, only the highest will be considered. 8 lakhs. Am I clear to you? இந்த ரொம்ப சிம்பிளா தான் இருக்கும். இது வந்து ஒரே ஒரு வாட்டி தான் வந்திருக்கு. Other questions are there in the material. Haji Musa Limited, the associate domestic company, exported bananas to Mystery Incorporation for an amount of 81 lakhs. Mystery Incorporation is located in an NJA. Mystery Incorporation is not associated with the associate in whatsoever manner and is a rank outsider. During the year, the assessee has billed 84 lakhs and 86 lakhs for sale of similar goods of identical quantity to Sun and Moon Incorporation respectively, which are located in Kuala-Lumpur. Both are not associated enterprise. The permissible variation for the international transaction is 5%. The management want to know the tax implication of 94A in respect of the above transaction entered into with Mystery Incorporation. Tolerance limit.
It's not applicable.
Ama. 86 lakhs will be taken and the income will be increased by 5 lakhs தான்டா. எனக்கு எங்க I got little worried அப்படி கூச்சலாம் நினைச்சேன்னா நீ அதை கால்குலேட்டர்ல போட்டடா. நான் வந்து அப்பதான் ரொம்ப கஷ்டப்பட்டுட்டேன் நானு. ஓகே, நான் உன்னை எவ்வளவு பெரிய ஆள் பிஎஸ்சி மேத்ஸ் எல்லாம் நீ படிச்சிருக்கேன். 86 minus 81 போட்டிருந்தான். Okay, so I'm not answering this, you know the answer. So, and there is no tolerance limit. First, okay, so you are defending him. Okay. Okay, you are defending that. No, so I cannot. எங்கெல்லாம் கால்குலேட் பண்ணமோ அங்கெல்லாம் இவர் போடட்டும் அப்படி போட பார்த்துதான் படவா. Question number 33. Mr. X, a non-resident individual, is due to receive interest of 5 lakhs during March 22 from a notified infrastructure debt eligible for exemption under 1047. He incurred expenditure of 10,000 for earning such income. Assuming that Mr. X is in a NJA, discuss the tax implication under 94A read with 115A and 194LB. ஆமாம். Mr. X, a non-resident, is due to receive from a notified infrastructure. அது இந்தியால இருக்கிற notified. அதனால தான் 1047 applicable. Okay, now tell me. Okay. I mean, this is not a TP case. First, you remember that. The question எல்லாமே மைண்ட்ல அப்படிலாம் ஏத்திக்காதீங்க. This is not a TP case. Now talk. What Sudha? What Hari? What Aranganayaki? TDS question. Okay, it is a TDS question. Okay, right, I understand. 115A இன்னும் நீங்க படிக்கலன்னு, but 194LB normally infrastructure industry means 5%. Interest 5% is the TDS. Okay, for non-residents. எங்க படிச்சிருக்கோம்? Very clearly we did it in business trust. Okay, business trust, REIT. The interest is taxable in the ultimate hands of the unit holder. REIT is liable to deduct tax at source. Tax should be deducted 10% in the case of resident assessees and 5% in the case of non-resident, because it is infrastructure investment. All infrastructure investment, 5% is going to be the TDS. 115A will say that some things are taxable at 20%. Now the question, can X claim exemption? He is in a notified jurisdictional area. He cannot claim exemption. Okay, but irrespective of that, it is only, actually, sorry, my question is wrong. Can X claim expenditure? Okay, he cannot claim expenditure. But that is not the important, because if at all he is going to claim expenditure, it is only in that country now. The Infrastructure Development Fund has deducted tax at rates specified in the law, 5%, or rates in force, DTA, adnalda the problem, or 30%, whichever is higher. This is not a question on direct TP provision of ALP. This is a question. Mr. X, a non-resident, is due to receive interest of 5 lakhs in March 22 from a notified which can claim exemption. He incurred expenditure of 10,000. I will not allow it as deduction. The person who is paying is liable to deduct tax at source. The person, okay. May I? May I? Okay. Right. In the examination, in the போனவாட்டி ஒரு ஃபாஸ்ட் ட்ராக் லெக்சர்ஸ் கொடுத்தேன் மக்களுக்கு. அப்போ ஐ டோல் தம் தின் கேபிட்டலைசேஷன் அப்படின்றது ஒரு கொஸ்டின் அப்படின்னேன். They have asked two questions, in fact. What is thin capitalization? In fact, before going into thin capitalization, this is a financial management aspect. Okay. What is the best form of investment? Equity or debt? Huh? இல்ல, investing in company. Equity. Why equity? So which is the best form of investment? Debt. Why?
Less.
Why? The payment will be made for the first, so risk is less. Okay, come to tax and talk. Uh, Deduction, the profit is after charging interest. All of us? Taxable profit, interest is an allowed deduction, whereas dividend is not an allowed deduction. So, a foreign company want to start a subsidiary in India, want to have a joint venture in India. They have to invest some 10 crores. They invested 50 lakhs as capital, 9 crore 50 lakhs as debt. Thin capitalization, where in the total capital structure of the company, which is being invested by the same person, capital is a smaller component, debt is a larger component. Where did we start the story? No, in the transfer pricing provision, it is all due to Europe. Ireland said interest is exempt. Or any countries, some countries said it. So what did I did? I parked my investment company in those countries. From there, the tax rates are low or nil. From there, I made them the invest and give the interest. Can I say you can only invest in equity? No, that is also not possible. So internationally in debts, the OECD made a resolution, limitation of interest. நம்ம capital structure நம்ம கையில இல்ல. What is the maximum interest you can pay to an associated enterprise? And they restricted it to 30% of EBITDA. Interest, tax, depreciation and amortization. In across the world, amortization is a bigger concept for intangibles. Depreciation is a world concept for tangible assets. But in India, everything is depreciation, so no problem. We can say EBITDA, but worldwide they call it as EBITDA. Interest is restricted to 30%. You cannot claim more. Let me tell you that my actual interest to AE comes to 50 lakhs. 30% of EBITDA comes to, let's take 26 lakhs. Okay, disallowance provision applied for 24 lakhs. I cannot claim 24 lakhs. Are you understanding? Okay, but have they invested? Are they eligible for this 24 lakhs? Yes. So law gave you one relief. In subsequent years, actual interest is less than 30% of EBITDA, then claim the disallowed interest in those years. Good, Raja. 8A wise. நீ கொஞ்சம் பொறுமையா என்ன மாதிரி வரலாம். நீ இத புரிஞ்சுக்கிறதுக்குள்ள நீ அடுத்தது உன் பேர் என்ன ஒன்ன கேட்க படவா என்ன அவசரம். ஓகே ஓகே ரைட். டு யூ அண்டர்ஸ்டாண்ட்? இது ஒரு லாஸ் மாதிரி ட்ரீட் பண்ணி in whichever year you are unable to tax credit, when I have paid the tax as per MAT or AMT, the difference can be carried forward as a tax credit like that. Okay, now உங்களுக்கு யாராவது புரிஞ்சா அந்த கேள்விக்கு நீங்க தனியா அவனுக்கு பதில் சொல்லுங்க. The advantage of debt over equity is that the return on debt interest is tax deductible, or in other words, deduction is allowed before computation of tax, whereas dividend is not allowed. This is utilized as excess advantage by various MNCs started contributing more in the form of debt than in the form of equity. OECD, while implementing BEPS norms, recognized this and allowed countries to form rules in this regard. In our law, section 94B is incorporated to put maximum cap. In the aspect thin capitalization. Capital is less, is more. Accordingly, excess interest will not be allowed. Allowable interest is total interest paid or payable in excess of 30% of EBITDA, or interest paid, okay, whichever is less. However, this provision will not be applicable if the total interest does not exceed 1 crore, and this provision is not applicable for banks also. This interest is not applicable for interest paid to branch of a foreign bank. In other words, lender being P in India who is engaged in banking business. One benefit is excess interest that is disallowed can be carried forward and claimed in the subsequent year in which the maximum interest does not arise, maximum of 8 assessment years. Okay, what Raja? P in a permanent establishment. Ninth point தான். Oh, okay. And the 1 crore, okay. No, I agree with you. One point is that. Number two, while reading a provision, we are always looking for loopholes. We are not first trying to understand the provision. நம்ம மைண்ட் நம்ம ஆபீஸ்ல அப்படி ட்ரெயின் பண்ணி வச்சிடுறாங்க. இதுல ஷால் யூஸ் பண்ணிருக்கா, மே யூஸ் பண்ணிருக்கா, முதல்ல இது என்னன்னு பாருங்க, அப்புறம் ஷாலா மேயான்னு படிக்கலாம். NP Limited, an Indian company, has borrowed 80 crores from TL Incorporation, a company incorporated in London, at 10% per annum. The said loan is repayable over 5 years. Further, loan is guaranteed by ST Incorporation, incorporated in UK. Messrs. Tweed Incorporation, a non-resident, holds 40% voting power in NP Limited and ST Incorporation, where 26% or more of the voting power is held in two different enterprises. Those two will also be treated as associated. Look at this. Messrs. Tweed Incorporation is holding 40% voting power in both NP Limited and ST Incorporation. Okay, ST Incorporation is the one which has given loan. Oh, sorry, TL Incorporation is the one which has given loan. Now, I'll coming to that. Net profit of MSS SC Incorporation 7 crores after debiting the above interest, depreciation of 6 crores and income tax of 4 crores. Calculate the amount of interest to be disallowed under PGBP in the computation. So there is a guarantee of the said loan is repayable, guaranteed by ST Incorporation. என்னமோ நீ கால்குலேட்டரையும் சேர்த்து பேப்பரோட அனுப்பணும்னு நினைக்கிறேன். Always first say why they are associated enterprises. Okay, ஆமா பெரிய கதை. Okay, where 26% is held in two different enterprises by the same person, then they both shall be treated as associated enterprises. Just more than 1 crore. The other one. Here is the position. Here is the, okay. Question number 35. A German company started an 100% Indian subsidiary investing 25,000 euros, that is INR 80 per euro, out of which 5,000 euros were considered as capital and the balance as debt on which the Indian entity is liable to pay interest at the rate of 15%. For the year ended, the profit after claiming interest and depreciation of 41 lakhs is 3.2 crores. Compute the disallowance warranted under 94B and specify the impact. ஓ ஓகே உனக்குள்ள பேசினியா கொஞ்சம் மைண்ட் வாய்ஸ் கொஞ்சம் கத்தி பேசிட்டியா ஓகே 25 lakh euros. So 20 lakhs into 80 is our debt component. The answer correct. Okay, okay. So 59 lakh 70,000. This is again a same question which got like our 34th question. Kiwi LLC is a foreign company incorporated in Singapore. Brightstar in Australia. Daffles Private Limited is an Indian company. The Indian company has taken a loan of 120 crores from Moonshine Incorporation, a foreign company, at the rate of 10% from 1st October. The guarantee for this loan was provided by the Australian company. This is the only loan taken. Kiwi holds 27% voting power in both. The first question. The net profit after above interest and depreciation of 1.8 crores, but before income tax of 9.2 crores before income tax is 9.2 crores. Income tax liability 1.2. Is there any disallowance? Append suitable notes. Same question repeated in exam. Same question. ஒன்னே ஒன்று ஞாபகம் வச்சுக்கணும். இந்த டேட் ஆஃப் லோன் ஓகே 6 monthsக்கு தான் இன்ட்ரெஸ்ட் போடணும். ராஜா உலகத்திலேயே ஏன் எக்ஸல் இப்படிலாம் பிஹேவ் பண்ணதுன்னு எனக்கு இப்போ வரைக்கும் தெரியாது. ஒரு லைனை செலக்டே பண்ண முடியல, ஆனா வேற ஒரு லைனை செலக்ட் பண்ணா அதுலேயும் இதுக்கு வர முடியுது. நோ அண்ட் சப்போஸ் சப்போஸ் ரொம்ப நேரம் அதை ப்ரெஸ் பண்ணியிருந்தேன்னா அது செலக்டே ஆகலைன்னா what I should do is I should select this and then press like this. தெரியல, I don't know. Many problems. Okay, இந்த கிளாஸ் செஷன்லாம் முடிஞ்ச உடனே போய் இதை வந்து இந்த டிங்கரிங் பெயிண்டிங்லாம் கொடுக்கணும். வாட்டர் வாஷ் தான். Hey, I mean, don't take it seriously, man.
Another foreign company.
Yes. So suppose Ananya, I'm unable to select this interest line வச்சுக்கோங்க. I should go somewhere else and select income. ஆமா, அதான் அந்த மாதிரி தான் பண்றேன். ஓஹோ, ஓகே, got it. Okay, okay, okay. ரொம்ப நிறைய டெக்னிக்கலா பேசுறீங்க. சிம்பிளா சொல்லி கொடுங்க. நான் உங்களுக்கு டாக்ஸ் சிம்பிளா தானே சொல்லி தரேன். May I? Okay, thin capitalization. That is, this concept is known as thin capitalization. Expect a question, okay, on limitation of this can even be if I am clear. This can even be a question in MCQ. What is the interest to be disallowed? Can be an MCQ also. Correct, you are right, Abhindra. நானும் அதான் சொன்னேன். டீச்சர் அக்செப்ட் பண்ணிட்டாரு. கிளாஸ் ரூம்ல வச்சுக்கிறேன் இந்த கான்செப்ட்லாம் நடத்திட்டே இருக்கு வந்துடுறேன். வந்தவொன்னு ஒண்ணுதான் சொல்லணும். அவன் நடத்தினதெல்லாம் மறந்துட்டு நம்ம இப்ப ஆரம்பிக்கலாம். Are we clear? Are we clear? Okay. So thin capitalization is a questionable area, my dear friends. Questionable area. Okay. Okay. Shall I progress? Right. Okay. Now understand this. There is an international company called Union Lever and an Indian entity called Hindustan Union Lever. Like that, I can, okay, Coca-Cola, okay, and Hindustan Coca-Cola, Coca Limited, or something, Coca-Cola Limited, something like that. Okay, so okay, this I call it as group company. This I call it as the Indian constituent entity. The groupல இருக்கிற Indian entity. Okay, what's a constituent entity? Part of the group which is there in our country. Okay, and Union Lever or Coca-Cola is known as the group company. Okay, this can be parent entity. Okay, and there is another word called reporting entity. Group reporter நான் பார்த்துக்கிறேன். Hindustan Union Lever can also nominate Hindustan Union Lever to be the reporting entity. Who is the parent company? But they are saying, I am not going to report. One of my constituent entity, Hindustan Union Lever, will report. Okay. I call them normally as reporting, but normally reporting is done by parent company. So I call them as alternate reporting entity. Okay. Why this will happen? Just now we saw the example. Majority are investment companies. Holding company எல்லாமே investing company. They'll just invest and leave it. அவங்கள போய் report because they will not have even employees or any big. So they will say, instead of me reporting, I know as a parent entity, as a holding company, I have to report, but I will nominate some other person to report. He is known as the alternative reporting entity. That can also be an Indian company. Constituent entity means நீங்க holding company practically consolidated financial statements போட்டிருந்தீங்கன்னா you will have in Excel so many subsidiaries, so many columns. Similarly, every country will become a column, which we call it as CBC, country by country reporting. Who should report? Reporting entity or alternative reporting entity should do. In the Indian constituent entity, என்ன சொல்லணும்னா, I am the ARE. I will report. If I am the reporting entity, no problem. Directly I will report. Or I will say, boss, don't look at my holding company. I am the ARE, so I will report. Or the other thing they can do is, boss, neither I am a parent company, nor I am a ARE. I am just a constituent entity. Apriya, where are you reporting? Sir, my company is in US. My company is in UK. From there, you can pick the reports. Because internationally, we have agreements, treaties. Okay, fine. Sir, my company is in Afghanistan. We are not in good terms. So you do one thing, you also report. Constituent entity might be a reporting entity, will become a reporting entity either directly or alternatively, or India does not have a free exchange with the other countries. So you report. Anyhow, it's your company. You can get the data and report to me. Remember these things when we are going to the next concept. Okay? Internationally, BEPS said working paper or the key factor. Documentation is the key factor. Documentation is the key factor for your entire proving arm's length price. That is the only way by which you can prove arm's length price. Correct? Okay. In your audit, you call it as working paper. What are all the types of working paper? Auditing la படிச்சதா சொல்லி தொலை. Permanent. Okay. In international transaction, it is known as master file. Permanent data la அங்க வச்சிடலாம். Master file, where I will maintain across the world, it will be one. You can pull out the data and give it master file. Then we call it as local file. Every law in our country, 92D, says what are all the documentation you should maintain. Your documentation will depend upon whether you are a constituent entity or reporting entity, everything. But our section 92D says that. Okay. BEPS has made it mandatory worldwide to maintain some things. Having these introductions, I go into documentation and CBC reporting. Okay. Absolute theory, listen to the theory. Every theory is there in the material itself. It is enough if you listen and understand that. Okay. The primary objective of transfer pricing documentation is to prove arm's length price. For nothing else, you need it. Okay. Okay. That takes place between different MNC group. This section imposes responsibility on every person who enters into an international transaction. I am entering into an international transaction with my associated enterprise. Rendu independent parties are இருக்கலாம். I need to maintain documentation to prove my ALP. The purpose is very simple, friends. I don't want to lose revenue. One line resolution across the world. Every country has to protect its revenue. I don't want to lose my revenue, so maintain document. So if I enter into an international transaction, or sometimes I am a constituent entity of an international group. Then also I need to maintain documentation. You just understood what is Hindustan Lever is a constituent entity of Union Lever. Hindustan Coke is a constituent entity of Coca-Cola International. The constituent entity is required to keep and maintain the information and document irrespective of the fact whether or not any international transaction is undertaken. If you are a subsidiary of a foreign company, probably you both have no dealings also, but maintain documents. Okay. AO may require any person to furnish the information or document within a period of 30 days from the date of issue of notice. Okay. It can be extended. Okay. What should maintain? What is that document? A description of the ownership structure of the assessee's enterprises with details of shares and other ownership. Okay. A profile of the multinational group to which I belong to. A broad description of the business of the assessee and the industry in which the assessee operates. That steel industry or question pato. Internationally, steel industry makes a 20% profit. I have made 25%, so drop the proceedings there. And the business of the IAE with whom the assessee has transacted. The nature and terms of international transaction entered into with each associated enterprise for analysis, functions, risk, assets, okay, a record of economic and market analysis. In this year, the economy has performed like this. This industry has performed like that. That you will get it from various World Economic Forums. A record of uncontrolled transactions. Okay, taken into account for analyzing their comparability. A record of analysis performance to evaluate comparability. How did I? What are all the functional differences I have assumed in doing that? A description of the method considering the determination of arm's length price and the method, assumption, policies and price negotiation, if which has critically affected the determination. In the words the details of the adjustment, any other information and documents. They need to be maintained for 8 years. In India, documentation needs to be maintained if the total turnover exceeds 1 crore. On the limit, you can limitation of interest 1 crore. Secondary adjustment 1 crore. So everywhere it is 1 crore standardized. What is 92D? We are now going to call it as local file. This namma law we have defined these are all needs to be maintained. Okay. Straightforward question now. Specify the documents to be maintained. Give a generic answer. You know what is transfer pricing. For transfer pricing, you know what. Okay. Now for transfer pricing, you know what needs to be maintained. You know, rate money at okay. Right. Now debts. Okay. A revised standard of transfer pricing document and a template of country by country reporting has been brought out. There are 3 tiers: master file, local file, CBC reporting. Master file, which is standard. Local file, specific to the local tax. நமக்கு 92D. அதில் சொல்லியிருக்காங்க what document has to be maintained. CBC, country by country reporting. Who has to report? Alternative reporting entity. Now constituent entity, India. Whether I should report or not depends on 3 factors. 1, if I am a reporting entity by default. If I am appointed as an alternative reporting entity, I need to. Third, NJA சொல்லாதீங்க. அது NJA இங்க இடத்துல அந்த வேர்டை யூஸ் பண்ணல. NJA நீங்க புரிஞ்சிக்கிறதுக்கு okay. If India does not have free information, okay, with the other country, okay, who should report? section இங்கேந்து பாத்தீங்கன்னா இதெல்லாம் section 286ல சொல்லிருக்கு. Okay, section 286. You will wonder என்ன சார் transfer pricingல 92ல இருந்து இப்படி ஜம்ப் பண்றீங்க? எப்பயுமே annual information report எல்லாமே 285 286. Okay, all annual information you saw 2885B they have not reported. Number business trust has to give that within June 30th to assessee within number annual information report by the bank on the deposit holders. This is 285. Where did we see? When we studied 147, information available based upon the annual information report filed. Okay, so another the gem. Okay, not that the lawmakers, everything is a basket in law. There is a logic. Okay, right. Subsection 1. Every constituent entity resident in India of an international group. Okay, our mind can open up Coca-Cola, Hindustan Coca-Cola, Ford India, Hyundai India. It's a constituent entity of a multinational group. Shall report to Director General of Income Tax at least 2 months prior to the due date of furnishing CBC report. Now CBC report. நான் என்ன ரிப்போர்ட் பண்ண சொல்றேன் subsection 1ல? Are you the reporting entity? First tell me that. Every constituent entity resident in India of an international will first tell to the DGIT whether they are ARE. If you are a reporting entity by default, whether they are an ARE or whether the group which for which they pertain to, details of parent entity, ARE, and the country or territory in which the such entities are there. No sir, I am not the ARE. Sir, this my ARE or my parent company is in Netherlands, is in Britain, is in US. That's all. This is a standard thing which you have to make. Okay, right. When you have to give to CBC 12 months from the end of the financial year. Contents of CBC. What am I asking you to give in? What is the revenue? What is the capital? What is the employment? What is the asset? What is the tax paid? 5 line items. Country by country, tell me what is your revenue? What is your capital? What is your employment? Assets and tax paid in every country. What are you reporting? In that, what are you saying? Okay, remember this. Tomorrow morning, first thing I'll ask you this. Okay, Pakka? Okay, right. Later on there. I will collect it from the reporting country. Tax paid in every country. The continuous words. Not in இது வரைக்கும் ஒன்னு அதுக்கப்புறம் in every country. I will collect it details. Responsibility of the Indian entity. We are more, which is there in subsection 4. These provisions are applicable if the resident entity is not the parent entity or ARE. The responsibility depends upon whether the parent entity is liable for CBC or not. Subsection 4 is applicable if you are not a parent entity, constituent entity. Probably, parent entity is in a country where they have not yet adopted transfer pricing provisions, CBC provisions. The responsibility depends upon whether the parent entity is liable to file CBC or not. Where the parent entity is not liable to file CBC in their country, then let the Indian entity file. Let the Indian entity will be liable to file. That you don't worry. We are only talking about responsibility of Okay. Ipo, in India itself, I have 3 constituent entities. The law says, you 3 decide. I don't want all the 3 of you to fight. Okay. Indian resident entity is liable to prepare CBC if parent entity or alternative reporting entity is located in a country with which India does not have free exchange of information. If there are more than one such constituent entity resident in India other than the parent or ARE, then the group can nominate one of them to furnish CBC. Repeating, CBC you file if you are an ARE or the RE. Otherwise, you are not liable to file. But when you are liable to file, 2 circumstances. One, if I don't have free exchange of information. 2, that country in which your parent entity is there, they are not adopting transfer pricing provision. I'm just asking one of the countries file, I will pick information from them. Okay? No obligation to file if the parent entity or alternative has filed in the designated area. Okay? And the report can be obtained by me. Then I don't want the Indian constituent entity to file. Are you clear? Okay? HULD webly available. DGIT is empowered under this subsection to call for such documents and information. Threshold limit for reporting 5,500 crores. World internationally turnover. Group turnover. Yeah. The total of all countries put together, if it is 5,500 crores. Please read through this once up to subsection 7. Transfer pricing. Any of the Middle East countries. Indian subsidiary will become the reporting entity. Generally, I am as far as we transfer pricing adopt பண்றதுனால provisions applicable ஆகாம இருக்காது. Provisions are applicable. Maintain document. Prove me ALP. Yeah. எல்லாமே documentation. The computation part is over. Only documentation. Are you able to understand? Maintenance and furnishing of master file. Okay. That is, every person being a constituent entity of an international group has to keep and maintain the details. Okay. Master file, you should also maintain. Of course, you pull it over from the common load. Okay, this has to be maintained irrespective of the fact whether there is international transaction or not. Person required to maintain every constituent entity if the consolidated group revenue exceeds 500 crores, the aggregate value of transaction during the year exceeds 50 crores, purchase, sale, lease or use of intangible during the accounting year exceeds 10 crores. Okay. So for not questioned area, the in-between word is and. Two conditions has to be satisfied. Okay. The in-between word is and. That is, group revenue should be more than 500 crores. Your revenue should be more than 50 crores or intangible transaction should be more than 10 crores, in which case you are supposed to maintain the master file. அது CBC key. Country by country. The maintenance of master file in India. Should you maintain master file? You should maintain local file. No doubt about it. Master file. For computing the international group revenue, TT buying rate should be adopted. Part A, Form 3 CEA, okay, shall be furnished by every person who is a constituent of the group entity. What are all the information? Same information only, repetition. Ana idu permanent file, okay. List of all entities in the international group along with address. So idella pull பண்ணுவாங்க. Dump length, they will just pull it and give it. Legal status of the constituent entity, okay. Description, nature of business, important point of profit, supply chain management, important service agreements, details of transfer pricing policies, list of major geographical markets for analysis, and important business transaction. Okay. List of all entities in the group, important intangible property, because I told you everybody is parking patents in some country, trademark in some country, capital in some country. Okay, depending upon which country gives a lesser rate for various things, they park. Adanala financial arrangement, group entities, etc. Due date of furnishing is the same due date as per due date of return, 30th November. More than one constituency, report can be just filed by only one entity designated. Okay, for 8 years you need to maintain it. Okay, so for CBC is not questioned, but it might come out anytime. Master file, local file, CBC. Local file in 92D, master file in Rule 10D, not a section, Rule 10D. CBC in section 286. We have read it the section, subsection wise. Simple to understand. Logic the stands full stop. Okay. I am going to the last part of my discussion on transfer pricing. Okay. Which is, I want to avoid litigations. I want to avoid litigations. So, department gives me an option. Let us enter into an agreement, which is popularly known as APA, Advanced Pricing Agreements, which is entered between the assessee and the department. What is the content of that agreement? It can say the method of ALP and the price of ALP. Repeating, method and the price. It can be any one or both also. Enter it, finish it, apply it, no questions will be asked. No dispute will be made. Okay. How this entire process work? There is something, international taxation, there are a lot of relaxations given, etc. There is something known as pre-consultation. The details. The assessee says, I'm thinking of, I'm not entering, I'm thinking of entering into an APA. These are my details. and this is the method which I want to adopt, and this is the price at which I want to adopt. Are you also willing? Pre-consultation need not be leading to agreement. It is just a consultation. After they negotiate lot of things, they can arrive at some pricing, some methods, etc. Then go for application for agreement. And then the agreement will be entered between the assessee and the department, which will be holding good for 5 years maximum. However, if the law changes, it will become invalid. If the law itself changes, it will become invalid. Otherwise, agreements are holding good for 5 years. Later, the department comes to know that you have misrepresented the facts. Agreement is void ab initio. Okay? Mens rea present, agreement is void ab initio. Then the law developed slowly. Agreement enter பண்ணிட்டீங்க department-ஓட. Now you go and tell the department boss, I have entered into an agreement. Last 2-3 years, assessment is pending. 147, 143.3. I'll do one thing. I will apply whatever agreement we have entered into for those years also. Please allow me to do that. International taxation is full of English, not a legal terminology. The jargons are more of English jargons. We call this as rollback provision. Whatever agreement entered into, can I use it for the past years? In 2 circumstances should prevail for using it. The critical assumption should be the same. The department should be satisfied it is of the same nature of transaction, same circumstances prevailed. Second and most important, by applying this agreement, your income should not reduce. Last, I'm not ready to take. In that case, I will allow rollback. You can roll back for 4 years. When assessment is pending. Uh, 147 la எப்ப வேணா ஓபன் பண்ணலாம். Okay, roll back for 4 years. Suppose one of the year assessment is over, you have gone on an appeal. Can I roll back? Yes. No, appeal. It is in appeal. You cannot roll back, but I will help you out with the answer. What the law says, withdraw the appeal and then roll back. Department is also ready to withdraw the appeal and roll back. Okay. So, once an agreement is entered into, you have to say, I want to roll back. They will give you 90 days time to file a modified return of income. Revised இல்லை. Revised time over ஆயிருக்கும். Using this agreement, apply it in the last years and modify your return, pay the taxes, we will drop everything. Okay. Section 92CC talks about advanced pricing arrangements. CC and CD. This is an agreement between the taxpayer and the administrator for determining the method of computing the ALP and the ALP itself. It can be a method go by profit split method, go by cost plus method, go by this method, or determine the ALP itself. APA can be entered into at any time. Application will be presented at the beginning of the year. APAs are entered into for avoiding disputes. Rules of the lay specified. First step one is pre-filing consultation. An application will be presented by the assessee to the department for pre-filing consultation. Assessee shall present all the facts of international transaction which is entered into and seek consultation. Assessee shall also specify the TP method and the variation. Assessee shall also seek to define some terms which has not been defined. Okay, this can be a pre-filing. Okay, pre-filing consultation override. They both are. Now go for the next step. Application for entering into APA. Assessee shall apply for entering into APA. Department, after going through all other aspects specified assessee by the assessee, shall enter into an APA. Application should be made in form and fees. Content. What should the APA consist of? Nature of transaction, agreed method, agreed ALP, and the definition which the assessee has sought for. Binding. To whom it is binding? APA is valid for the assessee as well as the department. APA shall be valid for a maximum period of 5 years. APA will become invalid if there is a change in law or change in facts. When will APA be declared void? Where APA has been entered into by misrepresentation of facts. Then void ab initio. Remember this point. In 4 places I am going to speak about this. If this misrepresentation, void ab initio. இதுக்கப்புறம் நான் பேச போற இடம் DRP, Dispute Resolution Panel. AAR, Advanced Ruling, Agreement for Advanced Ruling. GAAR, இந்த எல்லா இடத்துலயும் இந்த words common. If it has been obtained by misrepresentation of facts or mens rea, agreement is void ab initio. Rollback mechanism. Whether the APA has been entered into, can it be made applicable for past years? Assessee should make an application, for APA validity for past year. The board should be convinced that the international transaction of the past year are also same in nature, which we call it as அங்கே உங்களுக்கு highlight பண்ணி காமிச்ச critical assumptions. If the board is convinced, then they shall provide rollback mechanism. Rollback can be maximum for 4 preceding years. Rollback is applicable only if the following conditions are fulfilled. Return is filed within the due date. Original return should have been filed within due date. Assessee should have also applied the transfer pricing, audit report. Modified return should be filed within 90 days from the date of entering into agreement. Modified return should be filed within 90 days from the date of entering into agreement. Am I clear to you? Okay. For all those years for which assessee has filed modified return, AO shall assess or reassess within 12 months from the end of the month of APA. Assessee at the time of filing modified return will pay all taxes, everything. When will rollback mechanism not given effect to? If the department has made it to at affiliate level. If by applying APA for any year, the income computed reduces, the APA will not become applicable. The first thing, they will always withdraw the appeal. Okay. What happens to appeals filed before judgment but not yet rendered? The person who filed the assessee can withdraw the appeal for those years and apply for modified return. In case of merger, how will rollback provision apply? The agreement is between the board and that assessee only. Other assessees cannot take benefit of it. Read through APA once. Read through patiently APA once. Yeah, yeah, obviously, no. உனக்காக அங்க ஒருத்தர் ஒர்க் பண்ண போறாங்க உட்காந்து அக்ரிமெண்ட் வெயிட் பண்ணிட்டு உன் ரிட்டர்ன் ஃபைல் பண்றதுக்கு நீ ஆடிட்டருக்கு ஃபீஸ் பே பண்ண தெரியுங்களா நீ பே பண்ண டாக்ஸ் நீ ஃபைல் பண்ண போற ரிட்டர்ன் okay, okay, now I want to go back somewhere and come again. இப்போ you will understand this. 92C. இப்போ இந்த 90 days computation, now you will understand better, where adjustment is due to APA and the APA is entered before due date of filing returns. 90 days from the due date of filing returns, where he has not repatriated, where adjustment is due to APA, APA is entered after due date of filing return. This is also for rollback provisions. 90 days from the end of the month in which APA is entered, not from the due date. Okay, where it is not repatriated, then interest from there. Okay, so remember that 90 days for the forthcoming years from due date of return. For the rollback provision, within 90 days file the return. That's why it has been kept so. Okay, I always have something to comment in நீங்க நினைக்கலாம், but இருந்தாலும் எனக்கு DIY Limited, a company registered in India and a subsidiary CD, a company registered in Austria, DY is manufacturing fabric. To arrive at ALP applicable to its transit, DY enters into an APA with the board on 25th November 21. Accordingly, there will be substantial change in the income. Also, DYI applies to wishback for previous years 17-18, 18-19, 19-20, 20-21. Can they do so? 4 years. ஏன்னா அவன் வந்து புட்சாலி, assessing officer முட்டாள். The AO wants to apply such transfer pricing provision from 14-15 onwards. See, the question of the framing எனக்கு வந்து, they can ask, you are a chartered accountant, DY Limited want to apply from 14-15 கூட கேட்கலாம். They always want to put down AO. So இது எங்க ரிஃப்ளெக்ட் ஆகுது? என்னைக்கா நீ அசஸ்மெண்ட்டுக்கு போகும்போது நீ சார்ட் அக்கௌண்டன்ட்டா? Not necessary, no. This can be avoided, right? So he has correctly said 17-18, 18-19, 19-20, 20-21. 4 years only rollback. The AO wants to apply such transfer pricing from AY 14-15. DIY Limited filed its return for assessment year 21-22 before due date and assessment year 22-23 also before due date. The assessments of 18-19, 19-20 are completed, but the assessment of 22-23, it should be 21-22, sorry, is pending on the date of entering into UR. You are required to answer the following. Whether the AO is correct to apply the TP provisions from 15-16? No. In respect of 19-20, TP arrived at by the board is resulting in reduction of the income of the assessee. Discuss whether the rollback provisions will apply? No. what will happen to completed as well as pending assessments. Okay, 4 years rollback. Okay, wherever your completed assessments also will be opened and modified returns will be filed. If you want to roll back for all 4 years. Okay, and do it. Roll back. It's an option other than. Okay, am I clear to you? Okay, 6-mark question. 2 mark. ஆனா நம்ம வெறும் எஸ் நோன்னு எடுக்கக்கூடாது. ஆமா. No. For pending assessment, assessment is kept, put on hold, and then you filed a modified return, close it. Assessment order will be passed based upon the modified return. Optional. Anna, I will roll back for 17, 18, 19, 20, 18, 19 எனக்கு வேண்டாம். அந்த ஆப்ஷன் கிடையாது. Yeah, you cannot choose. This years I will roll back. They can choose. When they lose revenue, they can choose. Yeah, yes. ஆமா நான் மாத்திடுறேன். Yeah. See, these are all penalties exclusively for TP. In the previous questions, I told you penalties, I will come separately. Exclusive, the TP, I don't want to, international taxation, we should not miss even 1 mark. I didn't look into it in penalties chapter, but I want you to remember now. Failure to furnish CBC reporting. எப்பயுமே reporting நாலே 50,000 per day. அங்கேயும் நம்ம பார்த்தோம். Okay. Failure to furnish up to 1 month 5,000 per day, more than 1 month 10,000 per day. Where notice is served but not filed, 50,000 per day. எவ்வளவு month வேணா இருக்கட்டும் per day. File பண்ணு. Failure to provide information or documents required, 5,000 per day. No. That is between countries. Here itself, ITPO asked you to provide information, documents. Okay, you have to file this within 2 months before, whether you are a reporting entity, constituent entity, alternative. If penalty proceedings are initiated, but still information is not provided, 50,000 கொடுத்துரு. Same notice. என்ன same? அது வந்து exclusively CBC க்கு இது எல்லாத்துக்கும். Penalty for incorrect information in CBC, 5 lakhs. Underreporting, misreporting, you know. Failure to furnish audit report, 1 lakh. மிச்ச எல்லாம் 2% of international transaction value. By heart it before going to exam, because we are looking at that marks. Whether or not. Hmm. 92D is local file. 92D is local file. Okay, this is transfer pricing. 1 question from methods, another 5 marks from anything. desktop. It can be secondary adjustment, it can be limitation of interest, it can be APA, it can be CBC, it can be documentation, it can be anything. Be open. But if you sit continuously for 3 hours, TP is over. Okay? If you sit continuously for 3 hours and take this 40 pages, TP will be over. Be sure. You will not be missing anything. Okay? Non-resident taxation tomorrow morning 6 o'clock. All the best, friends.